The Kenya International Investment Conference was held in Nairobi, bringing together investors from across the globe. Here are the highlights.
This year's edition of the Kenya International Investment Conference showcased developments that have strengthened the country's economic outlook.
Since last year's inaugural edition, we have implemented measures to improve the investment climate in the country, and we will continue to do so. Because of these initiatives, Kenya has moved up the investment ranking globally. We are among the most improved countries to invest in the world. We have given serious attention to infrastructural development with big investments in energy, roads, and the standard gauge railway from Mombasa to Nairobi.
The theme was a resounding "Think Investment and Make It Kenya," a statement that captured the heart of the forum.
Ernst & Young Attractiveness Survey for Africa for 2014 placed Kenya among the 3 top investment destinations in sub-Saharan Africa and the most preferred in East and Central Africa. In the just released World Bank Ease of Doing Business report of 2016, Kenya improved from position 129 to position 108 globally, making Kenya the 3rd most improved country in the world. As a result, Kenya's 2014 foreign direct investment inflows hit 97.8 billion, a 95% increase from 49.9 billion in 2013.
The conference laid its focus on a broad spectrum of sectors and hosted 175 investors from 30 countries.
This year, we've decided to focus our conference on 7 thematic areas, which includes agriculture, textile, apparels and leather, ICT, renewable energy, tourism, land and property, and infrastructure and logistics.
Allow me to mention the countries that are part of those who have registered to attend this conference. We have delegations, Your Excellency, from China, from Belgium, from the United Kingdom, from Japan, from Malaysia, from the United States of America, from India, from Denmark, from South Africa, from Canada, from Korea, from Netherlands, from Pakistan, from Sweden, from Turkey, from Zimbabwe, from Ethiopia, from Spain, from Colombia, and lastly, from Switzerland.
At the forum, the Oxford Business Group unveiled the Kenya 2016 report that highlights factors key to Kenya's economic outlook, such as the economic inclusiveness of devolution.
As we all know, Kenya's urbanization rate is fairly low. You've got maybe a little over a quarter of the population in the major cities. As a result, you've got only about half the country within a 5-kilometer walk of a health facility. You've got somewhere between 1/3 and half of the population connected to the electricity grid. Work and economic activity is concentrated in the cities. You've got Nairobi, which has more than 10% of the population, but accounts for a quarter of GDP. So devolution is one of the key factors in addressing this and ensuring a more sustainable, even-handed, and inclusive growth throughout the entirety of Kenya's territory.
The report also discussed the importance of pursuing East African regional integration as a move to grow business.
You take a look at Kenya's trade profile as well and its performance over the past 12 months, and that's been equally encouraging. You've got just under half of total exports going to continental markets. And despite the fact that Europe is continuing to limp along with low growth rates, exports to that continent have still gone up by 11 or 12%. You take a look to the future under the tripartite free trade agreement, Kenya will eventually, if it gets implemented, have access to 626 million consumers.
Regional integration has strengthened Kenya's position, supported by the emergence of a middle class and a vibrant domestic demand. We are working with our partners in the East African community to open up these 150 million common market to trade and investment. Various protocols that the 5 partner states have agreed on and ratified, such as the Customs Union and the Common Market Protocol, underlines this commitment. The agreement to set up a tripartite free trade area covering East African Community, COMESA, and SADC, signed in June 2015, is the latest milestone